Good morning, everyone. Thank you so much for joining us today. My name is Hajra Talat, and I will be your host for today's webinar on corporate tax compliance and administrative penalties, what UAE businesses should know. So, before we dive into the session, let me provide a brief introduction about our company, ACME Group. ACME Group has firmly established itself as a trusted tax and financial solutions provider across GCC and Egypt. We are committed to delivering high quality solutions tailored to the needs of various businesses across different industries. Our focus on quality and expertise has allowed us to build long term relationships with our clients. Our exceptional team consistently delivers value efficiently, making us the preferred service provider in the region. Now, let me give you the introduction about our esteemed speaker for today's webinar, Ms. Narmeen Essam. Ms. Nermeen is a tax associate with bachelor's degree in accounting from American University in Cairo. She has gained practical experience through internships at various companies in UAE. She has handled payroll processing, tax inspections, credit risk evaluations. With a strong academic background and proficiency in financial analysis, tax compliance, and Microsoft Office tools, Nermeen brings a detail oriented and eager to learn approach to corporate taxation and financial reporting. She is fluent in Arabic, English, and French, making her adaptable in diverse work environments. So, before we start, I would encourage everyone in our audience to share your questions in the Q&A section, and I would emphasize again to share your questions in the Q&A and not to raise your hands, as it would give our speakers maximum chance to answer your questions. So over to you, Narmeen.
So now let me introduce you what we'll cover today. Next slide, please, Mosen. Okay, so we're gonna start off by discussing the CT compliance requirements in the UAE, deadline for corporate tax registration and return, corporate tax reporting obligations, corporate tax penalties, to avoid compliance obligations, order obligation and transfer pricing, mandatory documentations, requirements, and proactive strategies to mitigate potential compliance risks. Let's move to the next slide, please. And these are the abbreviations that they were going to use throughout the presentation. Okay, the first topic that we're going to cover is CT compliance requirements in the UAE. So next slide, please. So these are the key milestones and legal development in the UAE corporate tax. So in January 31st, 2022, Ministry of Finance announcement of corporate tax. The UAE Ministry of Finance officially announced the introduction of a federal corporate tax regime. This announcement was a policy to shift to align the UAE with local tax transparency and base erosion and profit shifting initiatives by the OECD. And then in October 10, 2022, there was the publication of UAE Corporate Tax Law. The Federal Decree Law number 47 of 2022 on taxation of corporations and businesses was published in the UAE Official Gazette. This law outlines the corporate tax framework, including the 9% tax rate, the exempt persons, example, the government entities, extractive businesses, the taxable income threshold of 375,000 AED, the transfer pricing and arm's length principles, registration filings, and payment obligations. And then in June 1st, 2023, it was the effective date of corporate tax law. So in which the corporate tax law came into effect with the financial year beginning on or after June 1st, 2023. And then in October 2023, the Cabinet Decision number 100 of 2023. This Cabinet Decision clarified the conditions of qualifying income for free zones. under Article 18 of the City Law, defines what constitutes qualifying income for the 0% tax regime. The scope of qualifying activities, for example, manufacturing goods and distribution. And it also clarifies the excluded activities and the application for the de minimis threshold. And then in October 27, 2023, the ministerial decision number 265 of 2023 was published. It provides further details on the qualifying and excluded activities to be fees on persons, activities such as regulated financial services, real estate ownership, the activities that are typically excluded. And this complements the Cabinet decision of 100 of 2023 and sets operational parameters for applying 0% free zone region. And then in May 1st, 2024, the City Guide for Free Zone Persons was published. The FTA released the Free Zone Person Guides as it offers a detailed guidance on the 6 conditions in order to be a qualifying free zone. So it's very important for companies to know about the 6 conditions in order to be a qualifying free zone. So I'll go through them briefly. So first, we have to maintain an adequate substance, in which the company need to maintain a full functioning office within the free zone. This means that they should have full-time employees, where the company should incur operating expenses in the free zone in order to perform core income generating activities. And the employees should be under the company's visa. Until now, the FTA did not specify the number of employees, but it's better to have 2 to 3 employees. The second condition we have is the drive qualifying income. And then we have the minimum threshold requirements. And then we have the company is not elected to be subject to corporate tax. And for the transfer pricing regulations, the company will be required to comply with transfer pricing regulations and ensure that all transactions with its related parties and connected person will be at arm's length price in order to qualify a free zone. Maintaining audited financial statement, as the company will be required to prepare and maintain audited financial statements to qualify as free zone. Can we move to the next slide? Okay, so now we have the first full question of the day. You have 30 seconds to answer. Okay, so the question is, what's the deadline to file the corporate tax return? The correct answer is it's from 9 months from the end of the tax period. Okay, so now we're gonna go into more details regarding the deadlines. Can we move to the next slide, please? So we're gonna discuss the corporate tax registration and return filing, the key deadlines and provisions. So look, the first step in corporate tax compliance is the corporate tax registration, in which if it's incorporated before March 2023, the deadline will be based on the month of the original issuance of the trade license. And if it's incorporated after March 2024, the deadline will be within 3 months from the date of incorporation. So now for the corporate tax return filing deadline. Taxable persons are required to file their first corporate tax return within 9 months from the end of the tax period. Now we have few examples that are listed on the slide, but we have an upcoming deadline which will be on the 30th of September. If the financial year of the company is from 1st January 2024 to 31st December 2024. So as you can see, the deadline is after 2 months, which is 31st September 2024. And most of the companies, their deadline is their financial year is from Jan to December. And as per recent update by the FTA, the penalty for late corporate tax registration will be waived, provided the corporate tax return is submitted within 7 months from the end of the tax period. So now we're gonna move to the corporate. Can we move to the next slide? Okay, so now we're gonna move to the corporate tax reporting obligations. Requisites. The purpose. So we have the purpose of reporting obligations. The objective is to enable taxpayers to apply and maintain best practices in economic structuring, legal compliance, financial accuracy, and tax governance. And then we have the FTA focus. The FTA emphasizes that all submitted documents must clearly reflect the tax-based operating and financial structure. Submission should be enable the FTA to understand how tax liabilities were calculated and justified. And then we have transparency and compliance. Taxpayers are expected to uphold transparency in disclosures. They need to meet all compliance obligations, including timely submissions, proper record keeping, and complete disclosure under the UAE corporate tax regulations. And we have five key important reporting requirements. The first one is the audited financial statements. As we all know that these are like mandatory for entities meeting either the following threshold. If they have a revenue more than 50 million or they are claiming qualifying fees in order to for the fees on person benefiting from 0% regime. The purpose is to provide a reliable financial base for the tax computations. And then we have supporting documentation, which includes contracts, invoices, ledgers, accounting records, detailed justification for tax position taken. The purpose is to show how the accuracy of reported income, expenses, and deductions. And then we have the election and schedule for adjustments. The taxpayers need to file the elections under specific provisions, for example, small business relief, realization visas, transitional rules, tax group, and the schedule for adjustments, which includes, for example, unrealized gain, unrealized losses, exempt income. And we have the corporate tax return, as we stated before, that the annual returns filed is filed within 9 months from the end of the tax period, and it must include the computation of taxable income, deduction claimed, tax due if there are any, and we also need to take into consideration the deductibility of expenses. As you all know, not all expenses are deductible. And then finally, the transfer pricing disclosure form, which is mandatory if there's are related party transactions or connected persons. Or the entity meets or if the entity meets the transfer pricing threshold, and it would be the company will be required to comply with transfer pricing regulations and ensure that all transactions with its related party and connected person will be at arm's length price. And then can we move to the next slide, please? So now let's talk about the common issue that we need to penalties. Okay, let's move to the next question and the next slide. Okay, so now let's take the second question of the day. What is the time period of record keeping? You have 30 minutes, 30 seconds to answer. Okay, so 46 stated it's 5% and 54 stated it's 7 years. So the correct answer is 7 years. You have period of 7 years record of keeping. So this is better to keep your financials for 7 years in order for the FTE if they ask for any. So let's move to the next slide. So now let's get back to the common corporate tax issues. So we have five main issues that many of the clients faced or they might face. So the first, we have delayed registration. Many businesses miss their FTE assigned registration deadline, especially for the newly licensed entities. So some clients they don't know that the deadline already has passed. So this might lead to a delayed registration. The late or incorrect return filing. So returns are often filed close to the deadline without a proper internal review, leading to errors or misleading disclosures. And then unplanned tax payments. So even after filing, payments are sometimes delayed due to poor cash flow planning or lack of coordination. So the company needs to take care about the company's cash flow. Missing or incorrect elections, failure to make timely election. For example, small business relief, tax group, whether they are and the company uses realization basis. If they use transitional rules, they need to take these factors into consideration, which can result in the loss of benefits and or incorrect tax calculations. So this is really important. And incomplete or non-Arabic records. Documents maintained in Arabic or missing key support, for example, contract resolution can trigger audit issues. So it's really important for the company to maintain contract resolutions, ledger justifications, supporting documents in order not to face any issues. So these are the five important common issues that companies need to look to take into consideration maybe in the future. And then next slide, please. Okay, so now let's talk about corporate tax penalties to avoid. So failure to register or deregister on time. So there's a penalty of 10,000 AED. Okay, applies from the day after the deadline of registration or deregistration. All taxable persons must register when it's applicable and deregister from corporate tax with the FTE within the timeliness prescribed by the law, as mentioned before, and it's before March 2024. If the company is incorporated before March 2024, so it's based on the issuance date. And if it's after March 2024, so it's based on, it should be within 3 months. And late filing of the corporate tax return. The penalty is 500 dirhams per month for the first 12 months, and then it increases to 1,000 dirhams per month after the 1 year. And the corporate tax returns must be filed within 9 months after the end of the relevant tax periods. The rate after that can escalate to monthly penalties, as we stated before. It increases to 1,000 dirhams. And then delays in setting payable tax. Then a penalty is 14% per annum monthly, calculated monthly. This penalty applies from the day after the due date for payment. It accumulates based on the unpaid amount, creating significant exposure if the tax liabilities are not settled promptly. And finally, we have failure to maintain required records and information. So the penalty is 10,000 dirhams per violation, and it increases to 20,000 dirhams for repeated violation within 24 months. This, as I told you, we need to have like a financial for 7 years. So there should be a proper record keeping for at least 7 years. This includes accounting books, contract, transfer pricing documentation, supporting evidence for all tax position taken. And now I'll proceed with the Milan will proceed with the rest of the presentation. Thank you.
Good morning, everyone. Thank you, Nermeen, for covering the first two sections of this webinar. Now we move on to the third aspect, which is common transfer pricing issues that may lead to penalties. Next slide, please. So let's begin this segment on transfer pricing with the poll questions. So the question is, from a transfer pricing perspective, should the transaction between related parties be in compliance with arm's length price? So you have 30 seconds to answer this question. Thank you. So the answer is yes, and I can see 100% of the audience have answered the question correctly. As you all know, it is one of the foundational pillars of UAE corporate tax law. Whether you are dealing with a parent company, subsidiary, or even a shareholder that qualifies as a connected person, your transaction should be priced as if they were between independent parties. Now let's get into more details on how these principles is enforced through the corporate tax law. Next slide, please. So here we have the background of transfer pricing. The provisions of transfer pricing are outlined in three articles, Article 34, 35, and 36. Now, the arm's length principle, which is Article 34 of the corporate tax law, requires the transactions and arrangements between related parties or connected persons are priced as if transactions or arrangements are occurred between independent parties. Or we can say, in other words, the corporate tax law requires related parties or connected person to earn their fair share of profit based on this arm's length principle. So, after applying the arm's length principle, each related party or connected person should record operating profit in line with their respective functions, assets, and risk, which is for analysis. Next, we have Article 35, which defines the related parties. So, so this association means basically a pre-existing relationship with another person through kingship. So kingship can cover up to fourth degree of kingship, ownership or control, regardless the person is a resident of UAE or not. Then we have Article 36. So where a person is considered to be connected person, all payments or benefits provided by the taxable person to the connected person are deductible for corporate tax only to the extent that they are corresponding to the arm's length price. And very importantly, these provisions apply uh, to all cross-border transactions as well as the domestic transactions. So even if you are transacting only within UAE, the transfer pricing law still applies. Also, the transfer pricing provisions is aligned with the OECD framework. It includes for analysis, as I said. Also, the transfer pricing methods like resale value, TNMM, profit split, and the benchmarking to justify the arm's length position of the company. So, which is also equally applied to the free zone companies as well as the mainland companies. Can move to the next slide, please. Now, before we move on to the documentation requirements, here is another quick poll question. The question is every taxpayer required to prepare the master file and local file? The time starts now. Thank you. I can see there's a mixed bag in the answer. So the answer is no, because these documents are only required if specific revenue thresholds are met. Now let's break down it in the next slides. Next slide, please. So one of the compulsory uh, obligation is the transfer pricing disclosure form. So my friends, as you all know, it is a mandatory document which have to be filed alongside the corporate tax return, which includes the related parties or connected persons, and it should be submitted alongside the tax return. So, what does it basically include, and what all should be disclosed in it? Information provided in the disclosure form includes the controlled transactions, value of the controlled transactions, details of the related parties, transfer pricing methods used to determine the arm's length value of the controlled transactions. So the supporting documents that have to be maintained are the group transfer pricing policy, credit notes, debit notes, intercompany agreements, intercompany transaction documents, etc. Basically, the FTA uses this form as a risk assessment tool, so accurate reporting here can help prevent further scrutiny from the FTA. Next slide, please. Next, we have the local file requirements. So, who must actually prepare a local file? If the local entity has a revenue which is equal to or more than 200 million, or if the M&E group as a whole, the revenue is crossing 3.15 billion, they have to make the local file. So, what does this include? It focuses on specific control transaction involving taxable person and associated enterprises. It includes information on related parties and connected persons, financial details of these transactions, comparability analysis, the selection and the application of the most appropriate transfer pricing method used. Also, certain transactions can be exempt in the local file provided they are conducted at arm's length. So these can include transactions with natural persons acting independently, transactions with juridical persons that are rated as partners in unincorporated partnerships, etc. So, what all should this file include? Can you move to the previous slide, please? Yes. So, it should include the FAR analysis, as I mentioned, the benchmarking documents, contracts, and financial comparisons, also transaction by transaction analysis. So we can move to the next slide, which is also similar in the case of master file. Next slide, please. So similar threshold apply to the master file as well. So what does master file include? It includes a high-level overview of the multinational enterprise, the global business operations, transfer pricing policies, and key value drivers. It also includes details of global allocation of income, economic activity, intercompany financial activities, also the advanced pricing agreements, etc., across the jurisdiction. So basically, it helps the FTA assess the overall transfer pricing risk exposure of the company or the group. Next slide, please. Now let's talk about some practical issues and concerns in transfer pricing based on what we have observed in UAE as well as other tax jurisdictions. So all related parties must be conducted, related party transaction must be conducted at arm's length. That is, as if there were two independent parties. So this should actually include transaction with parent company, subsidiary, shareholders, or even key managerial persons. So what can be cherry picked by the FTA? So in countries like India or Australia, we have seen authorities pick certain related party transaction where they believe there is a risk or underreporting. So in UAE also we can expect the FTA to follow a similar approach. So even if you have 20 intercompany transactions, they may question just one or two high value or high risk ones. Next, we have kingship and ownership structure, which also may trigger scrutiny because the concept of relatedness in the UAE is broad. It just it does not just include direct ownership, it also include kinship, uh, control, and common interest. For example, if a company is owned by two brothers, even if there is no direct shareholding between the companies, they may be treated as related. Or let's say if a manager controls purchasing two entities owned by his spouse and a sister, the FTA may still consider them as a connected person. So we have to check on these aspects. Next slide, please. Now let's move on to the next section. What happens if a taxpayer disagrees with the tax assessment or or the issued penalty they believe is unfair? So in the UAE, we have a structured dispute resolution mechanism. So let's walk through each step in detail. So what should a taxpayer do when they are penalized? So they can do few things. First is to review the penalty notice, understand the legal basis and what is triggered, why is triggered. Sometimes it's technical, like error in the profile data or a missed election. The next step is to evaluate the position. Was there a valid reason, for example, were you waiting for a license renewal or were you facing system issues on the FDA portal? Then we have to gather evidence. So that can include email correspondences with the FDA, screenshots of the errors, or proof of attempted filing, etc. Then we can choose the action on which course to proceed with. If the penalty was incorrectly applied, you can file for a reconsideration. And if it was correctly applied but you had valid excuse, you can file for a penalty waiver request. So we will break both these options in the next slide. Next slide, please. So we have a poll question before that. The question is, how many business days do you have to submit a reconsideration request to the FDA after receiving a penalty? The time starts now. Thank you. I can see a majority of the audience having different opinions on it. So, what is the correct answer? Let's move on to the next slide. So, we have 40 business days. That's the window for submitting a formal reconsideration, starting from the date of the penalty or the decision made. So, let's break it down more by considering both these remedies available for the taxpayer. So the purpose of a reconsideration request, as I said, is dispute. It is a incorrect tax assessment or administrative penalty. The legal basis is Article 27 of the Federal UAE Procedures Law. So timeline is 40 business days, and it should include all the documents and also, if it is good, if it is translated in Arabic as well. And it can be extended once again if the decision is made after 40 business days. Now, coming to penalty waiver request, the purpose is to request relief even when the penalty is technically correct if there is a valid excuse. For example, it can include the FTA portal slowdown or illness faced by a taxpayer, or miscommunication with a legal representative, etc. So you can submit this penalty waiver request form through the Emara Tax portal. And here also the evidence and the supporting documents are the key. And the FTA may approve a partial or a full waiver to the taxpayer. So in both these cases, timely action and clear documentations are very critical. You can move to the next slide, please. Okay. Now, if the FTA rejects the reconciliation or you're still dissatisfied with the outcome, what is the next step? The next step is to escalate the matter to TDRC, which is Tax Resolution Committee, which is managed by Ministry of Justice. And how it works. So the objection must be filed through the online objection system, and you must first pay the disputed amount, and the TDRC will issue a decision within 20 business days, and it can be also extendable by another 20 days if it is justified. If either the taxpayer or the FDA disagrees with the ruling, they still have the right to escalate it further to the court under the civil procedures law. So what we have to keep in mind, we have to keep in mind that this step involves legal representation and court timelines. So this is typically used for very high or high value disputes. So let's move to the next slide, please. So let's just summarize today's session. Let's look at three effective ways to minimize the transfer pricing or the corporate tax penalties. So the first thing is to track deadlines and file early. That is, rather than waiting until the last minute, it is best to create a tax calendar that maps out the key compliance dates like CT return filing, the payment deadlines, etc. And practically speaking, planning ahead also gives the team time to deal with any unforeseen issues or any last minute technical issues. The next is to maintain accurate documentation. So we have to ensure all the documentation are up to date and properly maintained. This include contracts, board resolution, financial workings, and transfer pricing documentations if that is like applicable, and also the benchmarking reports. So having these readily available makes the filing smoother and it protects you in case of any FTA audits. Next, we do have to review before submitting it. So whether it's realized accrual on what basis, disclosure forms. So whether this review can be done either internally or with the help of a consultant. So any incorrect or incomplete submissions can lead to unnecessary complications like penalties or reassessment or even rejection of certain exceptions. Next slide, please. Now let's summarize a few practical ways to mitigate compliance risk under the corporate tax. So as we previously mentioned, we have to build a tax calendar. Uh, so it can help the taxable person to keep the taxable person profile up to date. Also, don't wait till the last minute. Instead of reviewing the CT positions at the end, it is best to review the CT positions quarterly with something like an impact assessment, whether in that we can assess the expenses. So there are no surprises or you can spot the errors early on. The next is to maintain proper documentations. So all supporting documents, including the financial records, contracts, internal approvals, as we discussed in this webinar, it should be maintained for at least 7 years after the end of relevant tax period, because the FTA can request this anytime. And also, it is best to seek professional advice during this first tax period. Uh, it is best to recommend or to seek advice from a consultant or with a tax advisor, as this is the first tax period, because the second set of eyes can ensure accurate filing and it can reduce the risk of non-compliance. With that, we come to the end of this webinar. Now I hand it back to Ms. Hajra.
Thank you so much, Mr. Milan. It was such an informative session, and I'm pretty sure our audience has gotten a lot of knowledge from this part. Now, I would encourage our audience to put your questions in the webinar question and answer section. So we'll move on to the live Q&A segment, and I'll be asking the questions to Mr. Milan and Ms. Nermeen, and both of them or either of them can answer them. However, before we proceed, I would like to know that I would like to request our wonderful audience to take a moment to share the valuable feedback um, on our webinar, on our company, on our website, and you can give the feedback for the webinar, and you can scan the QR code and display it in front of your screens, and you can give the ratings. So, on that note, we'll be moving to the Q&A part, and I'll ask that those questions that we have. And just to let you all know that due to time restraints, I'm not sure if we'll be able to take all the questions or not. However, we'll try our best to include as many as possible. So, Ms. Nermeen and Mr. Millen, the first question that we have is, if I filed the CT filing within 7 months period given to the waived penalty, is the penalty automatically waived? Milan?
Yes, thank you for that question. So under Cabinet Decision 75, the penalty for late registration is 500 or 10,000. But as per the new FTA grace period or the provision, now by submitting the return within 7 months of the period, the penalty
Mm-hmm.
is getting waived or refunded depending on the case. And as we can
Mm-hmm.
see from the latest update from the FTA, the penalty waive, which is being waived, is being rolled out to the taxpayers, and being it is back to the tax system itself. So it is getting waived if the return is filed within 7 months, and there is no need to submit any penalty waiver or reconsideration for this case.
Mm-hmm. Thank you so much for answering the question. I hope it answers your question. Next question is from Mr. Vakar. He said, "Good morning. Thank you for such a nice and informative webinar. My question is, if my company is small and is not coming under the threshold, do I still need to submit the corporate tax return?"
So thank you for the question. By threshold, I believe it is not crossing the 3 million threshold, which is the SBR. So
Mm-hmm.
even if it is not crossing the 3 million threshold for the full-fledged return filing, we still
Mm-hmm.
have to do the small business relief filing, which is very simplified filing, and it includes just filling out the elections and also the giving the proper revenue, etc. So we still have to file, which is mandatory.
Mm-hmm. Okay. So the next question is from Kate. What is the tax grouping election? How is this election made when?
The tax grouping election is normally first the parent company has to be the representative party in the group, and during the filing there will be elections in the section where we have to file for realization basis or whatever the elections are happening in the portal. So so the parent company, as I said, is a representative company, and they have to file all the elections accordingly.
Okay, thank you, Mr. Milan. And I hope your question is answered, Kat. The next question is from Mr. Rajesh. He's saying, is CEO and CFO of the company is connected person?
Thank you, Mr. Rajesh, for the question. So CEO and CFO can be a connected person because these people are considered to be key managerial persons of the company. So these people have to see their salary, and they have to see if the salary is going beyond the threshold, and they have to benchmark it to see if the salary is in the arm's length range.
Mm-hmm.
So if it is in the arm's length range, they can disclose it. And as I said, these people are key managerial persons, so they are considered the connected person.
Mm-hmm. Okay, so Ms. Narmeen, we have a question from one of our audience is Mr. Farouk. He's saying, what is the documentary requirement for related party transactions?
Ms. Hajra, can you repeat the question? I think she's not aware.
Okay, so what is the documentary requirement for related party transactions? What documents do the audience need or the company needs to have in place in order to have the related party transactions if they are having any of those?
I
I
think
think,
there's a technical difficulty in
yeah.
Nermeen's laptop. So the related party should have all the internal approvals, the board resolutions, how much the transactions, how much are the transactions, and the benchmarking reports also should be in place because the FTA can ask about the reports and whether they are in the arm's length price or not. So
Hmm.
all these documents should be in place, including the economic analysis.
Okay. Thank you, Milan, for answering that. Next question we have is from Marisol, and she's saying taxpayer paid the penalty for late registration and submitted the return. How to apply the waiver for the penalty?
Hi, Ms. Marcel. I'm gonna answer this question. So when you file the corporate tax return, it's gonna be waived automatically if you already submitted within the 7 months of your financial year.
So they do not need to apply or something. It will be
No,
waived off
it's waived
automatically.
automatically. Exactly.
Okay.
Okay. So,
Yeah. So
uh,
the next question we have is from Samiullah. He's saying if company's business is less than 1 million dirhams, uh, do they need to register as well?
yes, they do. They do need to register as a small business relief SBR. So yes, they still need to register. Registration and corporate tax filing as well.
Mm-hmm. Okay, so the next question we have is from Al Jafari. Mr. Al Jafari saying, are all documents required to be in Arabic?
No, they don't have to be in Arabic.
So they can be in English.
Exactly, yes.
The FTA, just one more thing to add. So the FTA also asks for Arabic documents in certain instances. So it is better that we also have an Arabic document in place. Yeah, when the FTA requests one, we can provide it.
Mm-hmm. Okay, so next question we have from Mr. Yadav. Oh, this one is tricky one. What shall be done if we miss to register the main company and we register the branch only for the corporate tax? So we need to do the separate registration or we can amend the taxable person details.
That is definitely a tricky question. So we have multiple options there. So we do have taxable person profile where we can amend the details. So either we can amend the branch details and make the main company's details instead of branch and put the branch in the local branch section, or if sometimes the amend taxable person may not work because certain fields are uneditable. In that case, we can request the FTA through a complaint or through a mail to allow those sections to be opened, and we can still make amendment.
Okay, so next question is from Diana. So Miss Diana is saying, is it mandatory to have audit for all the companies?
No, the revenue should be 50 million in order to be like audited financial statement, in order to maintain audited financial statement. And if you want to be a qualified free zone, you also need to have audited financial statement.
Understood, understood. Okay, so the next question is, so can we ignore the penalty charged to us for now, deposit despite their active reminder to pay the 10K?
No, unfortunately, we cannot, as we have to do filing and you need to pay in order to do the corporate tax filing. And as stated before, the registration intent is 10,000 dirhams. But if for the filing, you'll not be able to do the filing unless you pay the 10,000 dirhams. And for if you miss the deadline for the filing, you're gonna pay. You have 500 dirhams per month, and then after 1 year, it's gonna increase to 1,000 dirhams.
Okay, thank you for that one, Narmeen. Okay, so next one is the longer question. Please hear it carefully. Mr. Usman is saying, how should I consider payments from owners if owner is not taking any interest on the capital injected to run the operations? Would it still be considered a transaction with connected person?
Can you repeat the question, Sajra?
Okay, he is saying, how should I consider payments from owners if owner is not taking any interest on the capital injected to run the operations? Would it still be considered transactions with the connected person?
Yeah, so a connected person can take dividends, which is tax exempt. But if the connected person is taking any sort of salary, any sort of loan, or anything, they are subject to the connected person transaction criteria. So in that case, they still have to benchmark, even though they don't meet the threshold which for benchmarking. It is out of precaution, as it is the first tax period. It is advisable that they do the benchmarking and they see if the transaction is at the arm's length price.
Definitely, definitely. I agree. Okay, so the next question we have is from 10. In absence of bank statements, what alternative evidence can be used to substantiate tax returns during an FT audit?
So in absence of bank statements, it is best to have all the supporting documents ready, uh, which can include debit notes, credit notes, invoices, bills, receipts, etc. So these can at least substantiate, if they can substantiate all the expenses, then the FT might mark it as allowable or deductible.
Okay. Next question I'm also very interested in to know about. Mr. Farouk is asking, what is the tax treatment for capital gains and reevaluation, specifically to asset reevaluation gains, land, real estate?
So for these things, we have revaluation or it actually depends on the IFRS standards. So, so depending on what the transaction is and whether that transaction is matching with what the IFRS standard says, then yeah, it will be treated accordingly. So we
Mm-hmm.
need to know the nature of transactions.
Mm-hmm. Okay, so the next question is from Heba. Should we apply for the waiver to get corporate tax late registration penalty amount refunded if we submit return 7 months? I think Narmeen already answered the question.
Yeah,
It will be waived
exactly.
off automatically.
Exactly.
Uh-huh. Okay, so let's take the last question. Election is required for which category of companies?
There are multiple elections in the FTA portal. So one election is electing for small business relief. Another election is going for qualifying free zone person. So it depends on what the company wants and the company's revenue is, where the company is in mainland or free zone, and other mandatory elections are uh, the realization basis, transitional rules, etc. So elections, all the companies must make certain elections anyway.
Mm-hmm. Okay, well, that was more of a rapid fire than Q&A to me. And thank you, Milan, for answering all the questions with so much patience. And you gave a lot of information to our audience. I hope they are getting benefited from it. And thank you so much once again, Mr. Milan. And thank you so much, Ms. Nermeen, for delivering this informative and engaging session. I can still see the questions coming in. A big thank you to everyone in the audience for joining us today to this contributing and enriching experience. Your presence has actually made this session very valuable. And if until next time you have any queries, please feel free to reach out to all the numbers on the website and all the numbers in front of you in the screen. Our email address is there as well. And until next time, thank you so much. Have a great day ahead. Bye.